Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Friday, and it's St. Patrick's Day, and it does look like, it doesn't look we were very lucky today. It's a down day on the market. Not exactly what you want to see, but it is what it is. So let's get into it. Basically, we are still in a correction. The market is in a correction. So when the market is in a correction like this, the best strategy is to remain primarily in cash. And that's tough. Now I should be following my own my own advice here, but I tell you what, I actually did buy some things today, and unfortunately, only one of them's up. Not the greatest. Oh well, you get what you came for. So there you go. But taking a look at the markets today, basically what the deal was, it was kind of one of those days. The S&P was down about 1.1% to 3916.64. The Dow Jones Industrial down almost the same 1.19%, almost 1.2% to 3,186.98. The Nasdaq was also down, not quite as much, but it was still down. And this is kind of disheartening here. The Nasdaq volume was up, and so was the NYSE volume. So the question is, are we going to slip back down? Probably, probably will. It's just one of those things. Now, as I said, I do have some current holdings here. I did put some stuff into the hopper. I bought some AEHR. I'm down on that. I did buy some Elf Beauty. I'm down on that too. I'm up on Shopify, 1 whole cent. Not that great. And then Fortinet, FTNT. Now, all of these stocks, by the way, have a rating of over 90%. So hopefully we'll get a turnaround here, over the weekend. That would be really great if we did. But if not, set those stopwatch losses very, very tight. Here's the VIX. This is the index, of course, that shows the volatility. We were up today a little bit, about 10% on the volatility. So it just remains very volatile. Tough one to trade. This is a tough market to trade. Just up and down and kind of sideways, and man, just hard to trade. That's for sure. So be real careful. We want it. Right now, it's basically just we're going to have much diminished returns here. So we don't want to have much exposure. Just wanted to point out that we've got the great special on the Gavin McMaster's course. Normally, this course is $397. It starts on the 30th. I've taken this course. It's excellent. This is the Options Mastery course. And by the way, Gavin McMaster is a master in options trading. He is a columnist for the Investor Business Daily, and he's out of Australia. Very, very well worth it. This is a live course, and it'll teach you a lot of great strategies for trading options, which are great when you have a situation like we have now, where the market just isn't that cooperative and it's just kind of going sideways. So the Options Mastery course, super easy to get it. Just go to https://Dallas Trading Floor, and you'll be able to get you have to click on that one to get the special. Otherwise it's $397. So you gotta get the one. You got to go through this site, stan.store/Dallas Trading Floor, and then you click it, and then you click it again, and then that's where you can get the special. But it's $179. Definitely worth it for everybody out there. So I want to put that out there for everyone to take a look at because it is a good course. All right, let's go to the slides, and let's go to. All right, well, there we go. Okay, so Charles, how you doing? XOM next week. Do you see a rebound? Boy, that's a good question. Let's look at the oils. I was expecting more out of the oils, to be honest, Frank, but it just hasn't been that way. I mean, we've dipped all the way down to the 200-day moving average, which kind of stinks. I have to say, it kind of stinks here. This is the 200-day moving average right here. It's at 101.90. That's where the 201 is at, and it does look like it's fallen below that, but for some reason it can't get back up here. Now here's what this is a little disconcerting, and I want to put that out there for everyone. This is the you see the rising volume in terms of the selling. So I don't know. This doesn't look too. I wish I could say something better here, but the checklist is only 50% right now. So I'm totally out of the oil sector myself. This is, as you know, this is one of my favorite sectors, but in this situation, it's just difficult. I mean, it's just difficult to be in this. So ExxonMobil doesn't look like it's doing much. Now, here's one of the reasons why I did basically vamoose from the oil sector, and I went into some of the chips. Uh, again, it's just really tough. But it doesn't look like. I mean, I'd be real careful here. I think you got to wait for the earnings. The earnings. Let's look at some of the fundamentals here. Earnings are due on the 29th, so on the 20th, on the 29th. So basically where we're headed here is that the last quarter, which was December's numbers, the sales are up 12% and the profits were up a nice 50%. Now, can they do that again? Well, according to what they're saying here in their estimates, they're not looking for blowout quarters as much as they had been. So I don't think so. But who knows? I mean, who knows what's going to happen? I mean, that's just it's just difficult. Let me show you ones that I've been buying before we get to your next question, Charles, for KOF. I want to go over and look at AEHR. This is one I did buy today, and I bought it. Maybe I bought it too early. I don't know. But I'm gonna take a look at the chart anyways. AEHR. This is a company that makes equipment for the semiconductor industry to make the silicon carbide chips. These are the new chips, basically, that are primarily in the EVs. It's up after hours, thank goodness. I tell you, man. I bought in here basically right here, basically almost on the 21-day moving average, which is basically almost exactly the 21-day moving average, about 32. It's up just a tad. I mean, not a lot. It's up 32, about 35 cents. I do think it's going to get some support at the 21-day line and move higher. The reason I like this one is because this one is in a good area. Now it's come through earnings. The last earnings, the sales are up 54% and the profits are up 220% for this one. So very, very strong in terms of that. In terms of the fundamentals on that one. Is this the correct place to buy? Well, I think so. And the reason I think so is because we're getting up here to a higher high. Now the checklist isn't 100%. It was 100%, but it's only 89. I say only 89. That's a good checklist. But we will see how this one. But this is one of the ones that I did buy today, and that's AEHR. And I'm hoping I'm right on this one. I do think we're going to get some support at the basically where the 50-day and the 21-day line converge. That's what I think it's going to happen. One thing I am seeing is with the volume, I'm seeing the volume start to fall off, which is potentially a good thing. Now, unfortunately, there's both red and blue bars here. I wish they were just blue bars because that would mean that people weren't selling. But, very volatile. But the relative strength on this one, 99, which is in the top 1% of all shares. Also, the semiconductor sector, it's 6 out of 197, the semiconductor sector. So it's doing pretty well. So that's one of the ones that I did buy. That I bought today, AEHR. We'll see what happens with it. Who knows? Let's go over to Babadoc with, he's looking at the TLT. And of course, this is the bond fund, TLT. Let's kind of take a look at, see. If I can get that right. No. Well, it would help if I spelled it right. TLG. There we go. All right. This is the 20-year bond fund. And let's take a look, see what's happening. It's up after hours. That's interesting, but very, very small amount. Just a lot of activity, but kind of back and forth. It doesn't seem like it can get above the 200-day moving average. I kind of want to see what the checklist is not that great. Technicals, I don't know. I probably wouldn't be a buyer here. Let's look at the weekly chart to see. Yeah, we're still in the downward trend. I'd be careful. I mean, we definitely have come above this line here. We've definitely come above the 50-day moving average. That's a good thing. But the question is, can it hold here? I'd probably put this on a watch list, Bombadoc, but I probably would not be a buyer here. I'm a little skittish all the way around, all the way around. Let me show you one that I did buy today. That's Fortinet, FTNT. Now, I think that I think that the security software area is still a good area it's still a good area. It's above the reversal line. This is the reversal line, and it's above the 200-day moving average, and it's basically right at the 21-day moving average. Now the question is, did I buy this right? I don't know, but I think between 61 and 62. That's kind of where I think it's going. Gonna look at the chart where I bought it. I bought it a little bit too early here, and then we went down. But then at the end of the day, we had a nice spike. Doesn't really mean a whole lot, but makes me feel better, anyways. I don't know. This is Fortinet. This is another one that I have. Again, I'm just trying to get the strongest ones I can get. So that's kind of this in this market. Really shouldn't be buying a lot in this market. The market is in correction, but I'm just trying to get positioned here to see. All right. Hey, thank you very much, Sandeep. Let's look at NVIDIA. I do like NVIDIA. I mean, this is a class act. This is a great stock. I don't own it yet. I mean, I've owned this many times, bought and sold it. This is a nice looking chart. This is probably, if this holds up on Monday, I'm probably going to buy this one. If we look at it just basically from strictly a technical standpoint, extremely good acceleration of volume here. I really like that. Also, there's a gap up, and then it pulled back a little bit. But if we look, let's go over here to the 60-minute chart to see kind of if we can see it. Yeah, it's very nice action on this. If we look back a few days, it's just, it's very nice. It seems like, though, there's a ceiling right now. It seems like it's trying to get past about that 260 area. I do like this stock a lot. I'm primarily been focusing in the chip area. This area of the market, 2 out of 197. So very, very good. Let's kind of take a look and see where this one stacks up. Let's see if it'll let me. Sometimes it lets me, sometimes it doesn't. But this is looking very, very, very good. Let's go over here to the weekly and look at its rivals. The strongest rival that it has currently is LSCC. And this is the one I don't own this right at the moment because it's out of position. Oh, yeah, but it's up after hours. So LSCC, if we look at the two really strong semiconductor fabless stocks, one would be LSCC and the other one is NVIDIA. So let's compare them to each other. And I'm just going to compare them for the last, say, few months. I'm not going to go all the way back a year. But if we look at both of these, if we look at both of these stocks, see if we can get that up there for everyone. This is the comparison between two semiconductor stocks. One is LSCC, and the other one is NVIDIA. So Lattice Semiconductor and NVIDIA. Now, NVIDIA is by far the larger company. And since the first of the year, it's outperforming. So, if we're looking at two of these, this is the one I think that we got to focus in on. I agree with you, Sandeep. I think that this one might be the one. I think Nvidia is the right choice. The question is it where can we buy it? What's the setup on it? Let's see if we have a good enough setup on there. Yeah, we're only 2% off the 200. This is a good place to buy it. I think you're right, Sandeep. I like this one, and I think you're right on the money. I think you're right on the money. This is well set up. This is a good setup on the chart. So let's kind of look at that again. Just kind of look at where the technicals are, telling us where we can buy it. Yeah. Okay. Here's the thing. We have the 21-day line at 57. I'm sorry, 87.34, which is only 2% above, 2.4%. So this pullback today is probably going to give us a good opportunity on Monday. It's already up, but this is going to give us a little bit of an opportunity. As you can see on the 14th, I bought well, I guess I did buy it. So I did buy a half position. I didn't. Oh, this is Lattice. I bought Lattice. Okay, let's look at Nvidia. Sorry about that. Yeah, this is a little bit extended, 10% above the 21-day line. That's the only thing is that I really like Nvidia. It's outperforming Lattice, but it's a little bit too far away from the 21-day line. So if we can get a pullback, then maybe we'd be good. All right. AYX is it pulling back? Let's take a look at AYX. And AYX, yes, it is pulling back. I did get rid of this one. I had this one. I didn't. I bought it and then it violated it and I sold it. Unfortunately. Yeah, 81 relative strength. It's a good stock, but I want to see it. I want to see it base, and I want to see it move higher. So it is definitely pulling back, but it's definitely one to watch. But I don't think I'd buy this one right now. I just don't think I'd buy it. All right, Tesla. Let's look at the Tesla chart to see what's going on. TSLA. Now I've been out of Tesla for a while. Tesla is sort of trading in a range, from a high of about 215. That's around basically right here, about right there. Well, there it is. Got to draw them better. This is about 215. Of course, this is the low here. Which is which is about 165 or so. If we look at the 60-minute chart, you can see that better. Yeah, so that's the low, and then we have the high up here at about 215. So it's basically in this trading range. We've been trading, and then basically in the last few days, it's been moving up. I don't know. I think it could move to 190 here. I just don't know. Tesla is a tough one. I don't know if this is really reversed. So my thing on this one is I probably would not buy it until it came up to that red line. Why? Because that's the reversal line that I think that we need to look at. So I'm going to put a reversal line in there. I still think it's in a downward trend, but I think if it shows a little bit more strength and comes above this line, then it'll be in an upward trend. So right now, I don't really think you can buy. I don't think you can really buy it right now, unfortunately. Babadak, your thoughts on gold? GLD is interesting. It's an ETF that basically tracks the price of gold, and it has been moving strong because of the fears of the banks. Of course, it looks like First Republic is going to get a bailout. There's other banks that, by the way, that are in trouble. I think Comerica may be in trouble. Zions may be in trouble. There's a lot of banks out there that might give us some problems. Would I buy this here? Well, I think it's a little bit too late, but we can still buy it because it's It's only 5% above the 21-day line, and it is making a higher high. So, if you wanted to protect yourself, that might be a good place. It's forming a nice cup, and there's a lot of volume. You're absolutely right. So, yeah, I mean, GLD is a good way to at least hedge your portfolio because it's going to obviously, if we get a real bad, if we get a bank run or something like that, which we might get, that's going to be a good hedge, GLD. So I don't own it right now, but definitely on my watch list. That's for sure. I mean, definitely on my watch list. Um, for Mr. G, let's go to AEHR. I do. I bought this morning. I may have been too soon in this one. Um, the reason I like it, there's multiple reasons I like this one. Um, it's first of all, I've owned it before. Second of all, it is pulled back. It's basically pulled back to the to the 50-day line, and it's starting to get some support. I think in the after hours trading. What I like about this one is its strength. It's 99 relative strength, so it's in the top 1% of all stocks currently, and it's also the semiconductor group is 6 out of 197. So it's a very strong group. So in a weak market, I'm trying to get the strongest groups. In a weak market, I'm trying to get the strongest groups that I can. And one of the ones with the most opportunity seems to be the semiconductor market. Let's kind of look at the kind of the rankings of all the groups currently. See if I can. Yeah, there we go. And the group rank there. All right. So this is the ranking. This is the ranking of all the groups, basically out there. The number one group right now is the metal distributors, but I really can't look at that one because there's only three stocks in it. For some reason, telecom is good. I haven't really looked in for bargains there. Computer integrated systems, that's moving up very nicely. And so we do have these now. The chips have been the strongest sector, but that seems to be backing off a little bit. It seems to be backing off a little bit here. So semiconductor fabless, this is the one that I've been concentrating on. It has 31 stocks in it, so it was number two last week. So it's been falling a little bit in strength, but it's still quite strong. This is kind of where I've been looking for stuff. Also, I haven't really been looking in the leisure gambling equipment, but I need to start looking there because it's looking unbelievably strong, which is interesting. So, but AEHR definitely good stock, and I did buy it as well. All right, Amazon. Let's look at Amazon for Sandeep. Um, Amazon. The thing about Amazon is that it has a lot of exposure, of course, to um, retail, and retail is with this inflation is not faring as well. I don't really like the chart for Amazon, but it's a huge company, that's for sure. And but here's the thing about Amazon: it's just not. I'm just not convinced that it's turned yet. It's below the 200-day line. I'd like to see it move above that 200-day line on volume. If that were to happen, then I would be more interested in Amazon. I think that Amazon has a ways to go lower, and it still is, of course, in this downward trend. It's just kind of zagging, but the overall trend is down. The relative strength on this one, 36. So not something I don't think you want to be in Amazon right now. I think it may be going lower before it goes higher. Now that said, not all the big cap stocks are bad. I mean, Microsoft and Apple have been doing quite well. So in the last few days, so those are ones that you might want to look at. On Google, and of course there's several Googles, but GOOGL, that's the Class C stock. No, I'm sorry, that's Class A stock. Excuse me. GOOG. No, that's Golden Ocean. Yeah, that's Alphabet. Okay, so this is the correct stock. I always get this confused because there's the Class A shares, which are the non-voting shares. Then there's the Class C shares. Those are the ones that you want, that probably want And then there is Golden Ocean, which is a completely different company. So um, Google, definitely a lot of volume coming in here, and we're finally up at the 200-day moving average. Now, if you can move above that, if you can move above that 200-day moving average, that's where you want to start possibly looking at buying it. I wouldn't buy it yet, but it may be bottomed at 102. So we will see. But yeah, we're starting to. It's trying to make a reversal. Here's the thing: if we draw the reversal line on the weekly chart, we're just above it, but I want to make sure that it stays there. So I definitely think that this is potential. This is a watch list. I wouldn't probably, but I probably wouldn't be buying it now. One thing is I want to wait and find out how close to the 21-day line I can get it. 7% isn't bad, so we'll see. If it can hold this level for maybe another day or two, then it might be a good place to get in. The thing about Amazon, the thing about Google is that it's finally, I think, starting to turn a corner, which is a good thing. This is a good thing. All right, let's look at something. Let's look at a question here from Jack Williams. Let's look at the spider and see kind of what's going on there. Of course, the spider is the 500, typically the 500 largest um, stocks. And it does look like we're still in this downward trend on the spider. Now, the thing about the spider is I do think that we're going to, we've got some support basically here at about 360. And I think that the top, we're topping out at about, 415 or so. So it seems to be in that kind of range that we're getting, we're getting this. But I want to go and look kind of see on a longer term basis. This, of course, is the spider. Yeah, I still think with the spider, and I go out to the weekly chart to do this. I still think with the spider, we had a rally attempt. As you can see, we had this rally attempt, but we got some resistance about 400, and it was turned back, and so there's volume there. So it's going to probably make another rally attempt, but right now it doesn't look. It looks like, yeah. I mean, it's pulled down, so it's probably gonna. We'll probably have a good week next week because it does look like it's going to make a rally attempt. But really, just it really the problem with the market in general is that we're just kind of in the sideways doldrums where we're kind of in a trading range. We're going down, to about 360, and then we're bouncing, and then we're coming up to about 400, and then we're going down. So it's not really. That's what the issues are in the market. It's a really tough market to trade because it isn't really trending. It's just kind of in this channel. So not easy. All right, let's look at Costco. This is also for TikTok. COS. COS, I think it is. I have to be careful. COST, yeah. You have to be careful about this one because there's a company called Costco Shipping, which is Chinese, and I can't remember this. I think that, yeah, this is Costco Wholesale. It's the one you want. So you got to be careful about that. There's two companies with very very similar charts. Um, like the retailers in general, there's some retailers that are good. It's just that Costco is below that 200-day line. In terms of the mega retailers, obviously Costco is probably one of the best. But I want to look at the competition here because I think if we want to be in that retail space, I think that there might be something that's a little bit better positioned than Costco. Now there is Costco Mexico, which has pretty good chart, and then there's also, let's look at this one. Yeah. So right now, in terms of relative strength, Costco Mexico is probably better. I mean, Walmart Mexico is probably the better. Well, it isn't. That isn't really a great chart either, but it's above the 200-day line. So Costco Mexico, I'm not in this one. That's a little bit stronger. All right, let's Mr. Z. What's the difference between a market correction and a downtrend? Very good question. Here's the difference. Um, a market correction is a technical term. It's a technical term that means that the market has moved more than 10% from its higher high. It's moved more than 10% down from the last higher high, and so a downtrend is just that the market is in either an uptrend or in a downtrend. The market correction is an actual term that's an actual term that's used. Let's see if we can put this up for everyone. Um, I'll give you the exact the exact uh, the exact definition. And basically, what it is that a market correction means that we're down over 10% from the last. Let's see if we have it in here from the last higher high. So let's see. Yeah, market correction definition. There we go. From the last peak, we're down more than 10% from that last. Yeah, and there we go. Sometimes it's hard to get this right, but yeah. Okay, yeah. See here, according to Investopedia, and this is the difference. A correction is a decline of 10% or greater from the price of on the price of the security from the higher high. So we go to the higher high. If it's down more than 10%, then it's a market correction. Now, how do we find that in the entire market? We look at several indexes, like broad indexes like the S&P 500. If the S&P 500 is down more than 10% from its higher high, from the last higher high, that's a correction. So let's go to the S&P 500 and show you that exactly what I'm talking about here. 'Cause that's a really good question. That's a really good question. So this is the S&P 500 index. Oops, let's get this up there. This is the S&P 500 index, and if it's down more than 10% from basically here, that was the higher high, about 41.95, and you see here currently it's 39.16. So if we look at that, it's more than 10%. Oops, sorry about that. For some reason, I clicked on the wrong thing. There we go. It's more than 10%. So that is a market correction. A downward trend just means that it's going, the downward trend just means the direction that it's going. This is going down, this is going down, and then we can show a stock that's possibly going up, like LSCC. So if we look at LSCC, this is an upward trend. So trend has to do with which way the direction of which way the direction of the price is going. Is it going from Los Angeles to New York, or is it going from Seattle to Miami? And unfortunately, with the S&P 500, it's going from Seattle to Miami. We don't want that. So great question. Sorry to be so winded on that one, but a correction, 10%, and then with a trend, it's moving higher or moving lower. All right, let's look at PanW and Meta. These are both real good stocks. So let's look at Palo Alto Networks, PANW. Now I bought Fortinet today, which is in the same group, only because it was closer to the 21-day line. But this is a great stock, Palo Alto Networks. So let's look at Palo Alto Networks here. We came down to the 21-day line. That's the screen line here. We bounced and we bounced higher. So that's very good. It's up in after hours. Let's see if it's still buyable on Monday. On the technicals, we're going to look at it. We're going to see 3% there on that 21-day line. Well, that means that it is buyable typically because it's within 5%. Now, let's look at the checklist on this one. It's got a 100% checklist. So, well, here's the thing I would say about Palo Alto Networks. This is coming out of a nice base, as you can see, coming out of a nice base with a little bit of a handle. So this is definitely buyable. Palo Alto Networks is definitely buyable. Now, I didn't buy Palo Alto Networks today. I bought a competitor of it, which is Fortinet. Symbol on that one is FTNT. And as you can see, they're pretty much similar in performance. Let's go from the first of the year. There you go. Palo Alto Networks actually has a little bit better performance since the first of the year than Fortinet, the one that I bought today. The reason, though, I bought Fortinet was because it was closer to the 21-day moving average. But these are the two stocks, two of the stocks that are in the security space. Palo Alto Networks definitely outperforming, but also Fortinet doing quite well as well. So that's a great question. All right, MU. Let's look at MU. MU is Micron Technologies, and Micron is one of the largest manufacturers, of course, of memory. They are, based actually in Boise, Idaho, believe it or not. Great company, but they're very, very cyclical in that, sometimes it's great for them, sometimes it isn't. I think that we're kind of in one of these funks. Periodically, they get into these funks, and they get kind of stuck. But let's look at the chart for MU. There we go. There's MU. And see if we can do anything here. This is in a downward trend. Basically, this is sort of what we were talking about in a downward trend. You can see the trend. It's kind of going, if you're flying an airplane, you're going from Seattle to Miami, okay? See how that's going down? That's a downward trend. Now, it's come down, and then it's rallying to the 200-day line. This is the black line here. Why is that important? Well, if it moves above that 200-day line, then it becomes buyable. Right now, not really a great place to buy it. Earnings are in 11 days. I would be careful about this one. I'd watch this one, but the checklist is weak at 44%. And even though if we were going to buy this would be a pretty good place to make the entry, but overall, I would not be a buyer of MU. And there's a lot of reasons. It's in a downward trend. It's close to earnings, and it just doesn't look like looks like it's rallying, but it hasn't reversed. I want a stock that's moving from lower to higher, not from higher to lower. And right now, MU is moving from higher to lower. So sorry about that. It probably is not that good. BTC is actually moving up today. Interesting. Bitcoin. Well, let's take a look at BITO. That's the ETF that kind of covers it. BITO. There's a lot of people that are are looking at this banking crisis and they're going, I got to get into Bitcoin. I'm not one of them because I don't think that Bitcoin potentially is as good as gold. I think gold is gold and Bitcoin is Bitcoin, but it is rallying a little bit. And if we look at BITO, this is one of the ways you can participate in Bitcoin without owning Bitcoin. It's called BITO. It's called the ProShares Bitcoin Strategy. It's been in this downward trend really since this came out, but it is starting to rally a little bit. The jury's still out for me on this one. I probably am not a buyer of Bitcoin right now. I like cash better. Okay. BAC, let's look at the Bank of America. Oh, I have $1,000. Which stock should I invest in for a week? Good question. Here's what I would do if I were you. I wouldn't invest 100% of it. I'd invest I would invest a maximum of $500 in it. And I would get a stock that was in the best area of the market that I could get that was moving higher. Now, let me take a look at, I want to take a look at Elf Beauty, which is one I own. I don't know if this would be ideal, but this is a stock that I've been following and I do like. It's hard to say for a week. Weeks is really tough, but this is a company called Elf Beauty, and as you can see, it's for some reason had a really good run. It's basically 99 relative strength, so it's in the top 1%. They've had some excellent sales increases. Their profits are going up, and it does seem like they have a lot of funds that are investing in. So I really like this one, Elf Beauty. Now, is it the best for the week? Who knows? But there's where I bought it, as you can see. Up, I think we'll pull over. Yeah, there we go. Show you where I bought it. It's called Elf Beauty, ELF. It pulled back to the 21-day line, and this is where I bought it. So this one I definitely like. If I only had a week, I would probably look at this one. I think this one's going to reverse higher, 99 relative strength. It's got a 100% checklist. But of course, there's no guarantee, and I can't guarantee anything. But this is one. If I only had a week, I might be looking at this one. It's called Elf Beauty, and that's what I would do. Okay, almost at the end here. Let's do something for Bank of America, BAC. This will probably be the last one tonight. BAC. And BAC, basically, Bank of America. I probably would not invest in any of the banks right now. I just think that there's so much problems with them that we can't really do anything. Here's one thing about this: it's below the 200-day line. It's in a downward trend. So people are selling this. You can see it right here because all of these red bars here mean that there's big institutional selling of the bank. So I don't like this one. I wouldn't buy it. I would sell it. I would sell it. Oh gosh, I would sell this one. Now, to kind of show you, I've been sort of negative in all this, and that's never good. So I want to show you what I'm holding currently. Now, I'm not recommending this. I'm just showing you what I'm holding currently. Currently, I have these four stocks. I have AEHR, which is in the semiconductor test equipment. It's down a little bit today, but I definitely think this one's good. Elf Beauty, this is the one that I was talking about. I like this technically. I also bought Shopify again. This is one of my favorite stocks for right now. Shopify, it was up just barely, and then Fortinet in the computer software space. So this is what I own currently. So that is kind of that's kind of the long and the short of it. Now, if you want to get, if I talked a little bit about Gavin McMaster's course, but I definitely think it's very, very worthwhile. Normally, this course, this is an options course, is $397, but right now it's only $179. Now, in order to get that, though, you have to go through. You basically have to go through this site stan.store/Dallas Trading Floor to get this price, this special price. But it's very, very well worth it if you are interested. The course is gonna start on the 30th, and it runs about 2 months. I took this course, and I made $1,000 in a very bad market. This is about 2 years ago, after we came through after we get that COVID, after the COVID sell-off happened. So in 2021, I did this course, and it was excellent. Gavin McMaster, he is the options columnist for the Investor Business Daily. So, and he teaches this course directly. He's actually in Australia, but he teaches it on U.S. time. So great course. Definitely well worth it. But in order to get the half price deal, you got to go to my site. And it's only for people that are on Dallas Trading Floor, stan.store/Dallas Trading Floor. And that'll get you to the site. All right. Well, thank you, everybody. I hope everyone has a really nice weekend. I know I'm going to try to have a nice weekend. And I'll be back on Monday again. Also, just like to say, please like the show. That helps us out a ton. It helps us out a ton. And until next week at 5 o'clock on Monday, happy trading.